It's time for my surgery.
Are you gonna take your game with you?
No. The worst thing about this surgery compared to the original surgery was tearing more stuff up. But this one, I'm going in with a walking good foot, and we're going to mutilate it. So,
The lesson learned is to always
listen to Darrell.
healthcare. So we're going on a quick walk, just because it's such a beautiful day out, and Tim's surgery is final surgery, fingers crossed final, is next week to get his foot repaired. But we wanted to do this video to talk about selecting healthcare plans. We switched it up a little bit, and by we I mean Tim switched it up a little bit. I decided to not go to what's called a high-deductible healthcare plan. When looking at all of our healthcare options, I like to look at what the plans offer before deductible, what co-pays exist, and so on and so forth. And we both were thinking about switching to a health savings account plan, a plan that allows for a health savings account, because if you're relatively healthy, whether you're young or old, you can get on a HSA, and the money that you pay into the plan, it essentially just rolls over from year to year, right?
Right. It's called a triple benefit. So, health savings account. You can read all about it. There's many articles written about it. It's triple benefit. It's not tax. It's pre-tax dollars when you put it into the account, and then you can spend it on any health expenses, just like a flex spending account or any of these other accounts, health reimbursement account. But then also you can invest the money. You can invest it in the stock market. You can invest it in many different types of investment vehicles. And
well, let's explain that a little bit. So, what Tim is saying is that, let's say at the end of the fiscal or at the calendar year, let's say you've had no healthcare expenses that you've charged to your HSA, and if you got $5,000, you can roll that $5,000 into an investment vehicle, i.e.,
stock market,
yeah,
mutual funds, bonds, exchange traded funds. I think you can even invest it in your own real estate. I'm not sure though how that works. But then the triple benefit is pre-tax when you put it in, spend it on health care, and then when you reach retirement age, I think it's 65 currently, you can actually take it out, and if you can spend it on anything. I think you might then get taxed at your normal income rate on that money, but you can still spend it on healthcare tax-free, and you've let it grow. It's invested, yeah. So it's like an extra retirement account.
And disclaimer, we are not tax professionals, and we are not claiming to be your financial planner. So we're sharing insights based on our circumstances and what we did.
Right. Yeah, no, like I said, there's many articles that have the real truth, the professional advice on health savings accounts. But I had read about it. I had heard from coworkers, from family also, the benefits of it, and so I decided to finally do it. It really annoys me how the flex spending account cuts off every year, although there's a little bit of rollover, but it's so tricky to get exactly.
Yeah, you can only roll over $550 from a flex spending account from year to year.
Yeah.
And with the HSA,
It never
expires, and all of it rolls over.
I never knew who got that money when it expired for flex spending.
And one of the reasons why I stuck with the traditional healthcare plan and with the flex spending account, glasses. I'm going to be replacing my glasses this year. And so if I went with the HSA, I'll be tapping into that money. Don't want to do that. And also, I take a monthly prescription for my ADHD. And I called the medical service line or whatever to talk about what the expense would be if I went to the health savings account, the plan that allowed for a health savings account. And it turns out that the cost, while it's not the full cost of the medication, it's relatively high. And I'm like, well, I'm going to be tapping into that HSA account more than I would like to, which will reduce how much I could potentially roll over into an investment vehicle. So it's not really worth it for me to get on the HSA bandwagon. Tim jumped on it. So let's talk about or share your experiences with transitioning to the HSA, because there are a lot of bumps in the road.
Right. So the main thing I was worried about is that, I'm having this foot surgery. It's probably a bad time to switch healthcare plans, but I'm so sick of giving up that expiring flex spending money. So I was when I got into the high deductible plan, even though it was still Blue Cross, I was worried that it might not cover the same things that the normal plan covers. I think mine was basic or standard. I forget what it's called. But it seems like it does. There was one caveat that this Care First high deductible covers vision, apparently, routine vision exams, but I don't think it covers the glasses or frames or lenses. But it does not cover preventative dental, which I saw on the spreadsheet. I didn't think it was a big deal, but now I know that it is a big deal because I've had my first dentist appointment, and the x-rays cost $250 some. So anyway, so
and
you
didn't
might
know that going into the appointment. We made the appointment thinking that the procedure, the cleaning, was covered, and it totally wasn't.
Yeah, I should have looked at that. I should have looked at that more carefully and asked the dentist, like Darrell did. He checked around about any prescriptions he knew he might have to pay for, and all that type of thing. And Darrell has also had supplemental dental, which I might have to get.
Yeah.
And so,
but I only did supplemental dental when I had a bunch of like major procedures done, and I didn't want to have to pay beyond my copay out of pocket for some stuff, or tap into my flex spending. And so the supplemental dental insurance, I figured out the cost of it over the year, and it turned out it benefited me to get it for that year to cover all the work that I was doing.
Yeah, and I'm gonna have work. I have implants and maybe fillings and stuff like that. So and just also that preventative thing, that was a huge cost. Yeah. I should have told them not to do the x-rays, because all I wanted was a regular cleaning.
The other thing that Tim ran into was the transition from the traditional plan to the HSA. Did you talk about like how the timing difference and have to wait a month and all that?
Yeah. So that was a gotcha, sort of. Let's see. So when you join this high deductible plan, it pays part of your premium into the HSA. And, but what I didn't realize is that you're not eligible for the HSA except in a month where you're part of a high deductible plan the first day of the month. And the tricky thing was that apparently the federal government, I assume all of the federal government through OMB, puts you in your new healthcare plan on the first Monday or something. It was the 3rd of January. I don't know why the 3rd of January. Maybe because it was the first Monday or the first business day of New Year. I'm not sure. But they waited till the 3rd of January. That may be ineligible for HSA all the way through the first month, which doesn't really matter unless you have a procedure then and you want to pay for it out of HSA. And I'm still not sure, if I had a procedure in January, if I could pay for it with HSA once the HSA got, I became eligible.
And so it made you ineligible because of the waiting period in order to start the HSA, right?
It just made me ineligible because I was not part of a high deductible plan the first day of the month. I started healthcare. I didn't start HSA.
Got it.
And so anyway, and then there's all these rules about like December, there's these crazy rules. Anyway, so you might want to pay attention to exactly when you can get into HSA. And then they couldn't contribute that premium, the part of my healthcare premium, to the HSA because I was not eligible for the HSA. Anyway, it still sort of confuses me, but now that I'm in it, I'll stay in it for years hopefully, and all this won't matter because this is just the beginning problems.
So let's talk about the $20,000 billing hiccup.
Oh yeah, well and that could happen with any healthcare change. So because I changed health plans, my surgeon billed my December surgery to my January health care. And January health care, the Care First said, we're not paying for this because you were not a member of our health care at that time when you got that surgery, which makes sense. So I just had to have the surgeon bill to the December health care, Blue Cross Federal. So, it's still being ironed out because the surgeon's billing department is very slow at figuring these things out. But that's not the fault of the healthcare plan. So, yeah. So I mean, that's the big things that I learned right up front. I'm front loading my HSA contributions for the year. You have a max of $3,000, something like $3,000. And that includes the premium pass-through that the insurance company puts into the HSA for you. But I'm going to front load it. I'm going to meet that $3,000 limit very quickly in the year, just in case I have to have that money in there to cover expenses that I have for this surgery that's coming up in a week. So, so what
are the lessons learned?
Yeah, the lessons learned are to look at the coverage and look at what you might have to claim on it, and see if it's going to cover what you're going to have to pay for.
Basically, write out like what procedures you think you're going to have done in the year, what like monthly prescriptions you normally have. If you think you're going to be getting new eyewear, think about that, and then compare. They're usually brochures for the different types of plans. Compare what the costs are going to be, and if it's not easily known by looking at the brochures, call the companies. That's what those numbers are for, and you can ask them, hey, I want to know what my out-of-pocket expense is going to be based on whatever your situation is.
Yeah, there's one more thing you might want to know about is that you don't have to pay for expenses with the HSA when you have the expenses.
Oh, sure.
You can pay for them yourself and save the receipts and then pull it out of the HSA later. So I could save all my receipts for 20 years, invest that HSA, build it up to a huge amount, then pay all those receipts out of there after I've accumulated.
Now he's saying 20 years as a figure of speech, by the way.
Yeah,
okay, yeah.
Just an example. I wouldn't recommend that, but what I can do is build it up over a couple years because like I said, I'm trying to meet the annual limits and get a lot of money in there, start getting it invested, and then pull the money out in the couple of years that I've been having healthcare expenses. Pull all that money back out and reimburse myself. So it can be an investment vehicle that you tap for whatever other investment.
Feeling good. I feel more normal than my previous surgery.
Is that because you got your laptop already?
No, it's just because apparently they gave me less anesthesia. I think I told them that I'm a lightweight when it comes to alcohol and a lightweight when it comes to anesthesia, so they gave me lighter anesthesia. And they didn't give me the leg block at the knee like they gave me last time, but that shouldn't affect my mood, I don't think. Just the general.
Yay! I'm home. Oh my goodness, with all my battle scars from all the IVs they tried to stick me with. first time on crutches in 2 months.
I bet you hate that.
No,
What
fine.
is that? Is that blood? Oh no, that's just the surgery stuff.
Betadine,
Yeah.
iodine, whatever. I wiggled my toes, and I've also bent them against the car seat, which sort of disturbs me. But I mean, he said it's just the skin healing.
Welcome home, baby.
Thank you.